Welcome to the step-by-step guide to public service loan forgiveness. In this lesson, we are going to be going over what exactly is public service loan forgiveness, and we're going to be diving deep into the exact requirements to be able to get this forgiveness route. So, what is public service loan forgiveness? It is an amazing program for student loan relief. In a nutshell, if you work for 10 years and make 120 payments, one payment a month, then at the end of those 120 payments, all of your loans will be forgiven. In addition, you won't have to pay any taxes or fees on this forgiveness. So here's an example. I have been in public service loan forgiveness program, let's say for 10 years, and I've paid 120 payments, and I have accumulated now $300,000 as my student loan total at the end of that 120th payment. This 300,000 is going to be forgiven. So now my loan balance is zero at the end of my 120 payments, as well as no taxes on what is forgiven. So here are an overview of the exact requirements necessary to be able to qualify and get public service loan forgiveness. So remember that really fast that public service loan forgiveness is complete loan forgiveness with no tax liability. So it requires that you have a qualifying loan status, such as direct loans. It requires that you have full-time employment, that you have a qualifying employer, that you are making your payments in full and on time, that you have the proper loan repayment plan, and that you make 120 payments. Let's go into each of these requirements in much more detail to really make you understand, because this is where a lot of the trouble you see in the media is that people are not fully understanding these requirements and the process. So I want to make sure you are a public service loan forgiveness pro. So let's go over the first requirement, which is a qualifying loan. So unfortunately, only direct loans are eligible for public service loan forgiveness. So luckily for you, many new borrowers today are direct loans, but you may have borrowed before 2010. So if you borrowed before 2010, you may have several different loan programs such as FFEL or the Family Federal Education Loan Program, and those are not direct. But it's okay, you can still get loan forgiveness. So don't let anyone think that because you have those loans, you don't qualify. You just have to take a couple extra steps. Now, I'm probably scaring you, so how do you find out if your loans qualify and count? What I want you to do is go to your loan servicer's website like Sallie Mae or Navient and log in. Then you're going to go to your loan summary section or some similar section, and you should be able to see each of your loans and each of the loan amount totals, your interest rates, and so forth. But there, under each loan should be a label or a title, such as unsubsidized direct loan or subsidized direct loan. You really want to look for loans that say direct. If you have some loans that don't have the word direct, then you want to call your servicer for more information and clarify what type of loans these are and if they are eligible for loan forgiveness. Now, if you have a combination of direct and non-direct loans, that's okay. You can still get public service loan forgiveness, and I'm going to walk you through that next. So, how to get public service loan forgiveness, even if you don't have direct loans, or maybe if you have a combination. Because remember, if you have a combination of direct and not direct loans, yes, your direct loans will get forgiven, but those other loans won't. So, here's how you make everything qualify. So, if you don't have a qualifying loan, so maybe you have that federal family education loan like we talked about, you can still get public service loan forgiveness. You just have to do a couple extra steps, and these are the steps. One is you have to call your loan servicer and request that you get a consolidation of your loans, and that will then qualify you public service loan forgiveness because they are going to consolidate and change all your loans and group them all together into a new loan. And that new loan is going to be updated as a direct loan. And so now you have a qualifying loan. You want to make sure that after you have consolidated that everything's the same, that you're still in the same repayment plan, everything else looks good. And you want to make sure then to check and make sure that that consolidation has led to a transformation of your loans into one new direct loan. Basically, consolidation clumps everything together and gives you a new loan, and you may see that you have a different interest rate. That's okay. It weighted averages your loan. So say you have a $10,000 loan that was 5% and a $100,000 loan that was 7%. It will weight those out because the 7% $100,000 loan is a little bit more weighted heavily than the $10,000 loan, and that will give you a new interest rate. So if you see a new interest rate, that is why. Any of the payments, unfortunately, that you have made to your loans before you do this, and if your loans are not in that qualifying status, will not count. So say you've made 10 payments and then you all of a sudden are taking this course now and realize that you don't have direct loans or you don't have qualifying loan types, then unfortunately those payments won't count. But still contact your servicer and see if maybe you can negotiate something. But once you consolidate, then all those future payments will be then able to count for public service loan forgiveness. Okay, now for requirement number 2 is full-time work. What does full-time really mean though? If you read the fine print, you'll actually be happy to know that full-time in terms of public service loan forgiveness has a little bit of flexibility. So full-time for public service loan forgiveness is what your employer considers to be full-time, or at least, quote, 30 hours a week, whichever is greater. So say you have a job that is full-time, but maybe it's 30 hours, or 38 hours. That's okay. Those hours, since you're full-time, that'll be fine and you'll qualify for public service loan forgiveness. So it doesn't have to be only 40 hours. Now, what if you have multiple jobs? That's okay too. You can actually still get public service loan forgiveness, but both of those jobs have to count as a proper employer for public service loan forgiveness, and it has to total at least 30 hours. Now, if you're teachers, this is unique, but if you're, say, a teacher that maybe has the summertime, that's okay. Those payments that you make during the summer will still count because you're essentially like a salaried employee. Your whole annual contract is full-time. And so even in the summers, those payments should count for public loan forgiveness as a teacher. Okay, now we're going on to step 3, which is a qualifying employer. So, what employers really count? So, there's a huge misconception as to what employers really count for public service loan forgiveness. And this has really led to a lot of people after 8 or 9 years of paying to loans, sadly discovering that they aren't eligible and all those payments didn't count. And so it's really, really important that you know this fact, that it's not about where you work, but about who pays your paycheck, who actually employs you. For example, if you're a contract worker and you're employed by a travel company that's a private company, even if you work in a hospital that's a nonprofit, the travel company is your employer. So that is not qualifying employment and will not qualify you for public service loan forgiveness. Now, in addition, you can work any job as long as you are under a qualified employer. So you could be a janitor, you could be a musician, you could be anything you want to be and get public service loan forgiveness. You just have to have the right employer. So here's an example. I could be a cook at a hospital and get public service loan forgiveness. That's an example. A musician, that's an example. As long as I'm working at a hospital, at a federal building, a qualifying employer for public service loan forgiveness. So here are some more examples of organizations that qualify. So it can be government facilities at any level. So it can be federal, state, local, or tribal. Nonprofit organizations that are 501c tax exempt. You want to look for 501c tax exempt. There are other types of non-for-profits that are not under the 501c, but their primary purpose should be to provide certain services, then those may qualify as well. So I don't want to go into too much detail of that because there could be hundreds of different small companies that aren't under 501c that I cannot give you. So for that, you want to contact your HR in the company that you're working for or that you're interested in working for, and also call your loan servicer or Fed Loan Servicing, which is the loan servicer for public service loan forgiveness. In addition, working full-time for the Peace Corps or the AmeriCorps will also count. Here are some more organizations that qualify in a little bit more detail. We just went over these. So can contractors get public service loan forgiveness? I touched upon that a couple slides ago, but unfortunately, it's really frustrating that even though myself included, I worked for 3 years in a nonprofit, in a variety of nonprofits and in government organizations, and none of those payments counted towards public service loan forgiveness because I was a contractor or a traveler and not working directly for those nonprofit and government organizations. So you really must be employed directly underneath a qualifying employer to actually have your payments count. So even if you do work for that facility that's eligible, you have to have them employ you and be directly paying you. Otherwise, your work will not count for loan forgiveness. Okay, the fourth requirement is that you make qualifying payments which are full and on time. So what does that mean? You need to pay the full amount that is due on your bill and no later than 15 days after your due date. You want to also note that payments made during these following periods will not count to public service loan forgiveness. So even if you make these payments, they're still not going to count. So if you make payments while in school status, these will not count towards public service loan forgiveness. In a grace period, in deferment, in forbearance. So during those periods, you can still make payments, yes, and they will go towards your loan total. So you will be paying down your loan, but they won't help you achieve public service loan forgiveness faster. So if this is a route that you 100% know you are going to do, I would not recommend that during these time points that you make payments because it would just be wasting your money. Now, if you're someone where this is not the route and you are going to try to become debt-free as fast as possible, then during these periods of time, you want to pay whatever you can to your loan so that you can start paying the actual principal amount of your loan and become debt-free faster. Okay, the fifth requirement is that you are in a qualifying repayment plan. So there are many repayment plans and most count towards loan forgiveness. So any of the income-driven repayment plans should count. So that's pay as you earn, repay, ICR, IBR. The main point is that the 10-year standard repayment plan does count actually, but do not choose this plan because under the standard plan, you would have no loans to forgive at 10 years because the standard 10-year payment plan makes payments and makes you pay payments that will pay off your loans, become debt-free in 10 years. So you can pretty much choose any of the above income-driven repayment plans, but do not choose the standard repayment plan. Now, if you're saying, okay, that's narrowed it down by one plan, what about all the others? Well, my recommendation is that if you have the option, you choose pay as you earn. Now, depending upon when you're watching this course, pay as you earn may still be allowed for you or it may not be allowed for you. The Congress and the government is constantly changing these programs. But if you are allowed to, I highly recommend that you choose pay as you earn because you only have to pay 10% of your discretionary income, and that counts for public service loan forgiveness. And so paying this plan, which is the lowest payment of all these other plans, would allow you to save thousands of dollars and actually receive some loan forgiveness as well. In addition, pay as you earn is the best for if you are a married couple because you can file separately and your loan amount will, yes, count towards this, but your spouse's salary will not count towards how much you're ultimately making and your loan payments. Unlike repay, which will, no matter how you file your taxes, unfortunately count your spouse's earnings in addition to your earnings for how much you pay towards your loans every month. The sixth requirement, and luckily, yes, this is the last requirement, is that you have made 120 qualifying payments. Now, big bold note that these payments do not need to be consecutive. They do not need to be in a row. So let's go through some examples here. So you can still get loan forgiveness, say if you worked 5 years in a row at a nonprofit hospital, and then you had to take some time off, maybe for medical reasons or to have a child. and then you came back to that same job. If long as all the other requirements are followed that have been mentioned in this guide, then you should be able to apply for public service loan forgiveness because you're still working at a nonprofit. Those 5 years that you worked and now the new years that you're starting to work will all continue to count. So let's say you worked in a school for 3 years and then you switched settings and you worked in a nonprofit hospital for 7 years. Yes, if you've met all the requirements previously mentioned, you should still be able to apply because both settings are nonprofit settings. Now, you can also work, say, in a public school, a nonprofit school that counts as a qualifying employer, and then work in a private setting, which does not count, and then return back to public sector and receive public service loan forgiveness. It's very flexible. You don't get any penalty for leaving and going to the private sector. Just note, though, that the time that you're in the private sector will not count towards public service loan forgiveness. So basically, all your previous payments still count and they're kept in a jar, but it's like on pause until you return back. Now, while you are doing public service loan forgiveness, these qualifying payments, yes, we need to have them be in full, but do not overpay. Do not pay more than is required for each of your payments. And that is because if public service is the route you want, then you should try to minimize your payments and pay only the required amounts. There is no advantage to pay more towards your loans because your payments are calculated by your earnings and not by your loan amount. So it's okay if your loan amount continues to grow. It's based on your discretionary income, which is based off of your adjusted gross income. So that is the public service loan forgiveness requirements in really, really deep detail. I hope you now have an excellent understanding of what is public service loan forgiveness and what exactly it means to truly qualify and be able to get public service loan forgiveness. In the next lesson, we are going to be going over pros and cons of this route and helping you decide if this is the right route for you. So I'll see you in the next lesson.